Thank you for joining us this evening. My name is Renee Wyatt. I'm the Family Business Management Specialist in the Department of Ag Econ.
And I'm Denise Schroeder. I'm a Health and Human Sciences educator in White County.
Tonight we're going to be talking about financing your dream, developing and living within a budget.
And the material that we're bringing to you tonight is actually supported by a grant from the USDA and NIFA and the North Central Extension Risk Management Education. And the money that funds the grants that come from North Central Extension Risk Management Education actually come from crop insurance.
That's great to know. So this work is all compiled by the Purdue Farm Succession Planning Team. Our team is committed to cultivating strong farm families through the succession process by providing educational opportunities and current resources. And you can see the state of Indiana and the stars are where our current members are located. So we're going to dive right into budgeting. So how does budgeting help? So budgeting can help both in the personal and family budgeting side and also in the farm and enterprise budgeting side. So on the personal side, budgeting can help you plan for upcoming expenses. It can help you be more prepared for emergencies. It can assure that home and car repairs can be covered. And it can also identify trouble areas where spending is unreasonable. So what do I mean by trouble areas here? If you've got a written budget, and you're looking through it and you're saying, wow, we're in the red every month. What is this problem? You might look at your bank and say, oh, I see, it's Amazon. That could be your trouble area. So having this budget and writing it down can really help you kind of see where those trouble areas are and try to rein those in a little bit.
And it might be something as simple on the personal side as you're not shopping with a grocery list and you're going to Walmart every day.
Yep, and those little shopping trips. I mean, I swear I have 4 things in my cart and it's over $100 and I don't know how.
Yeah, they add up quick.
They do. So on the farm side though, budgeting can help you be prepared for bills that are going to come every single year and you know they're coming. Taxes, inputs, like chemicals, fertilizer, seed, things like that.
Fuel.
Insurance, fuel, yeah. You're going to have to pay for insurance every single year. Maintenance things are going to come up. And you can also budget for things that are unexpected, like machinery repairs. Say your combine blows up in the middle of the field. You know, you want to have the cash on hand to fix that so you can keep going. Crop failures are something we don't really want to budget for, but you know, those can happen. Enterprise failures, you could lose some kind of livestock, things like that. So budgeting really helps you be prepared for those things. So when we're thinking about needs and wants are very different things, but the line between them can blur.
Yes, it can.
It can blur very easily. So we've got a list up here. So which of the following are needs and which are wants? So when we're looking at it, only about 3 or 4 of these are actual needs. So I would say food is a need. Groceries, also a need. If you work from home, internet is probably a need. If your kids, if your kids do school things and they need internet, they're doing research for school, they probably need internet. That's probably a need. A new coat might be a need, depending. It's kind of blurry. Yeah. I don't know.
Yeah, but I always talk to people about wants and needs, and they say a new coat, I always say, a coat to keep you warm is a need.
Right.
The latest designer coat is a want.
Exactly. That's exactly right. So cable and satellite TV, almost everybody has that now, or some kind of streaming subscription. It's a want. It's not, you don't need TV to survive, right? So just looking at these things, just because everyone else has it doesn't mean you need it. And you may say, I need that monthly night out to get away. Okay, you might need a monthly night away from your kids, but maybe you have a monthly night in if you're strapped for cash. You can get around some of these things. So just make sure you're thinking about those when you're looking at your wants and
thinking about
needs.
dining out. It doesn't have to mean you drive to Indianapolis or you drive to Chicago.
Exactly.
It can mean the whole family goes out for dinner.
Yep, you could go out for pizza and it could be a cheat meal even. Yep, that's exactly right. So when you're thinking about these wants and needs, really be critical on yourself and really think, is this a want or is it a need? When we're thinking about these, needs are pretty simple for the most part, and they fall into mainly housing, transportation, insurance, gas, electricity, water, your basic utilities, and food. Wants can include travel, entertainment, designer clothes, gym memberships, dining and drinking out, all the fun stuff. And so the wants and needs categories, although it's very hard, they also apply to your children. So they might need that shiny new toy, but that's not a need, it's a want. They might not understand that yet, but it is a want. So
and another program that I teach is with third graders, and we hit wants and needs really hard in that program. And one of the things that we talk about is that clothing is definitely a need. Our society says we need to be clothed.
Correct.
And yeah, some societies don't, but anyway, our society says we need to be clothed. And I don't want to pick on the kids, but there's always at least one, usually half the class, that has a t-shirt with somebody's logo on it, whether
Correct.
it's Under Armour, Nike, whoever it is. And I always make all of them stand up so that it's not just one kid that we're picking on. I say, is that a need? Oh yeah, Under Armour t-shirt's a need. No, you need a t-shirt, but you don't have to have somebody else's logo on it.
That's correct. Yeah, and it's hard to explain to kids, especially when their peers have those types of things. I know it's really hard, but we do need to try to instill those in our children too, so maybe they can understand needs and wants when they get older too.
Yes.
Another thing we want to touch on is being able to make a payment is not the same thing as being able to afford something.
Right.
So you may be able to make that $400 per month, payment on your $50,000 truck, but it might be a 7-year note, and you might not actually be able to afford that when you actually look at your budget.
That's right. And also realize too that most car dealers are trained to sell by the monthly payment, not by the total cost. And if you're financing it over 7 years, you're paying a whole lot more in interest than you would if you finance it over 4 or 5 years.
That's correct. Yep. And they say, you lose how much value when you drive off the lot?
Several $1,000s as soon as you drive off the lot.
Yeah. So, that's another thing to keep in mind. Maybe you get a 1-year used car, you can save a ton of money that way. So just think about those different things.
Oh, did we want to touch on benchmarks for housing too?
Yep, that's correct. So when we're thinking about housing, we want to make sure that your mortgage is no more than 25% of your take-home pay.
Yes.
So I have a simple example. So say your family income is $100,000. You're making really good income as a family. After you take out taxes, insurance, things like that, you're left with about $70,000. After all those things, maybe you're putting into retirement too. You're left with $70,000. So 25% of that $70,000 is $17,500. So that leaves you with $1,400 a month for a mortgage payment. So you really need to do those numbers for yourself, make sure it fits into your budget.
Yes. And nothing says you have to spend that much either.
Correct.
That's like the top end of what you should spend.
Right. No more than $1,400.
Yes. No more than that 25% of your take home, not your gross, of your net.
Yep, exactly. So really look at those numbers, take some time, do that analysis, and try to find homes that fit into that to that budget. So now that we've talked about some needs and wants, why don't we look at that personal budgeting activity? We're going to give you a couple minutes and try to fill out the expected columns for your household. Make sure you're very, very mindful of your needs and wants during this time. This is a good time to really think about those and maybe evaluate some of the things you've been doing. We're going to give you 2 minutes and then we'll come right back. Great. So now that you have some wants and needs in your expected column, we're going to talk about how to calculate your budget. And so actually calculating your budget is just simple addition and subtraction. It's simple math. You take all of your income streams, you take away all of your expenses, you subtract your expenses, and what's left over you could do a lot of things with.
You can take that opportunity to pay down on your house. You can pay down on debt. If you are making an extra house payment, you want to make sure that the bank knows you want that to go towards principal only, so that it will pay down quicker.
Yep. Another thing you can do with this income that's left over after you pay your expenses is you can start an emergency fund. So you can start putting away some money for those rainy day funds, like if your kitchen somehow blows up, say your dishwasher starts smoking and you need a new dishwasher, or something like that. You have a leak, things like that.
Your refrigerator dies.
Your refrigerator dies, and leaks all over your kitchen. Yeah, weird.
Yeah, that's happened to both of us.
Yeah.
One of us more recently than the other.
Yeah, so you want to have some cushion for things like that, so you're not scraping and putting it on a credit card or something like that if you can avoid it. You just and then after all that is done, and if you have just tons of money left over, then you can go to those ones. You can go on some awesome vacations and spend some money on designer clothes and have fun with your money.
So we've talked about individual or personal family budgeting. Let's talk a little bit about budgeting for your business or your farm. One of the things that we want to make sure that we do is that we keep separate books and separate checkbooks for our family and for our farm or our business. Okay, it makes it a whole lot simpler at tax time. It helps keep our business from taking our family funds and vice versa. And it demonstrates a much, much clearer picture of your business finances to your lenders. Because if you commingle all your funds and you're not necessarily keeping track of things and you're pulling money from your business, you may find yourself in a world of hurt when it comes to tax time, because if you're pulling money from your business, that's considered income to you personally, and you're going to have to pay taxes on it. Okay?
Yeah.
So we want to make sure that we're keeping track of those things separately. Okay. Some of the business categories that we want to include, we want to make sure that we list all of our income. And when we're thinking about our income, we want to list it by product. Okay, so if you're a grain farmer, we want to keep your corn and your soybeans separate, and any other things that you might have that are grain products, wheat, whatever, alfalfa, things like that. And you also want to list the quantity that you have that you potentially think you're going to sell, or that you have when it's coming in. And things. And then we also want to include our fixed expenses. So our fixed expenses are things that's going to happen whether we have any kind of production or not, whether it's a bad crop year or something happened to our small business, and we're basically not in business, but there are things that we still have to pay. We still have to make our principal payments on our land, our buildings, any kind of structures, any of our equipment or our machinery. We still have to pay cash leases to our landlords. We still have to pay for our insurance. Okay, and then we also still have to pay taxes on our machinery, our equipment, our buildings, and our land. And we also need to plan on paying interest and accounting for our depreciation on our machinery and our equipment. Okay. Some of our variable costs that vary obviously by what's going on in the economy and things like that is the cost of fuel, materials, any of our inputs, seed, fertilizer, chemicals, things like that, repairs, our labor costs, any kind of custom operations that we may pay, and make sure on your income, if you're doing custom operations, you're accounting for that in your income too, if it's a given. Okay, we don't want to we don't want to put in there custom operations that we think we might have. Like if you do some kind of trade with the neighbor for combining their wheat, but it's not a given every year. Don't count on that money.
Right.
So, and then also storage costs and stuff if you don't have on-farm storage.
Sure.
So, then there are various kinds of budgets that you can think of. Whole farm budgets are things that we construct annually as far as the farm's concerned. It includes all of our income, all of our costs associated with our farm's yearly production, and it summarizes our major physical and financial features of our farm. Okay, a partial budget, we can construct those when things change. The economy changes, we need to buy a big piece of machinery, things like that. And we do partial budgets when it's a relative minor change in the whole farm plan. So things that we don't always have to do, and so partial budgets aren't something that you would probably do every year, but you could do them occasionally. Okay, and they include only the increases or decreases in expected revenues or expenses. Okay, and they can be used for decision making. One of the things that we talked about when we were going through setting this up, so I said, oh yeah, the way the farm economy was this past year, I told Renee one of the things that happened is my banker had called and said, hey, where are you on your income? I want to know when all your grain's delivered, and I want to know what your actual revenue was and everything, so that he could see where we were as far as income because of the way the farm economy was.
Sure.
And everything. Okay. Other things that are important is a cash flow budget. This is something that is constructed monthly, or constructed by the month. Usually you construct it on an annual basis, and you can update it every month so that you can see where you actually are.
Okay.
According to what you projected for the year. And it's concerned with timing of receipts and expenses in a production period and everything, so basically for the year. And lenders use that to determine what kind of borrowing decisions they're going to make and repayment terms and things. So if you're running on a master note or whatever else you want, I'm trying to think of the other term that people use. Anyway, I always call it my master note. The banker, I put together a cash flow, and the banker says, oh, okay, you need this amount of money this month and things like that. And here's your income, and here's your income stream, and here's your expenses and stuff. And this is what you're going to need at any given month to make it through the year, so that it supplements those when when it's August and there's not a lot of cash flow.
Right, because farmers don't get their money every single month like you would if you worked for a corporation or some kind of entity.
Yeah, where you're not getting a regular paycheck.
Right, you're getting cash in these lump sums at random times, and you need to have it at other times.
Yes, you do. You need to stretch it out. And so, those master notes kind of help cover those leaner times. But you've got to be responsible for those too, and making sure that
not overspending.
And making sure that you've got enough money to get through the year and everything, and that you are living according to that cash flow that you constructed, the first of the year, the end of the year, whenever that was.
Yeah.
And everything's. Enterprise budgets are specific to a specific enterprise. So if you've got multiple enterprises in your business, it would be an excellent idea to construct a budget for each one of your enterprises. And if it is something that you're just starting, when you first started out, that's an excellent time to start keeping a separate set of books for those things, because that way it just really, really helps you know, is this business making money or is it not? Is it going to become a hobby, or is it really going to make some money?
And if you are losing money, you really need to look at it and see if there are ways to make it profitable. And if not, like you said, you don't want all of your other enterprises consumed by this one enterprise that's losing money.
Exactly.
Yeah.
So then we have some examples of the things that we just talked about. This is an example of a whole farm budget. Okay, and you see your income listed there for each one of your things. This is an example of a small farm, income from vegetable CSA memberships, poultry sales from your eggs, poultry sales from meat, and lamb meat sales, pork sales, seedling sales, winter off-farm work. So if you've got a part-time job and you want to plug that in there as part of your farm budget or your business budget, as opposed to your personal income. It could go either way. It depends on where you need that money.
Right.
Okay. And then partners off farm full-time work. Okay. And when I look at this budget, okay, this is great to have, but what we've done is we've intermingled stuff.
We have, yeah. So maybe pull off that partners off farm work.
Full-time work. Yeah. So we probably do want to do that. So there's our total gross income, and kind of breaks things down that way. So, and then a whole farm budget example for expenses. It talks about the cost of or the inputs that we have to put into the greenhouse, money into watering equipment, seeds, composting, peat and soil amendments, seedling trays, plastic pots, labels, things like that, for the total cost for our expenses there. Okay, whole farm budget example for machinery equipment. we've got a tractor, a mower, a snow blower, and we already own those things. So we didn't put anything in the budget because obviously they're paid for right now.
Right.
If you're still making payments on those, make sure those payments go in your cash flow. Because you need to be able to make those payments and the interest. And that, is part of the reason that sometimes we need, that master note, so that we have a way of making those payments when, let's say, they're due. Hopefully they're not due in June. Your payment's not due in June. Hopefully you've set it up so that those payments are due when you're going to have some sales coming in.
But even though those are paid for, they still have gas so they still have expenses, and there's probably still some kind of insurance on those, even though they're not paying on the actual equipment itself. So that's something to consider. Yeah.
So we've got in there building maintenance and repair. Okay. So that's buildings, but we also need to factor in some repairs in there also for our equipment.
Yeah.
Okay. As well as, like Renee said, for our insurance and stuff too, and upkeep. You've got to, do oil changes, filters,
new blades,
all that belts, kind of stuff. All those kinds of things. Okay, so we've got shop tools on there and things like that, and then miscellaneous. One of the things I have learned from my accountant is, if at all possible, put things in specific categories, and and not in that miscellaneous category. We don't want to get that. We don't want that category to get way out of control, where we're not really accounting for this. Because if you're not accounting for it here, you also probably didn't account for it on your cash flow.
Right. Yeah.
Okay. Okay, so then we look at our grand total for our expenses in our budget. So we've got our total farm expenses of $29,710. Our property and our vehicle expenses for about $40,000. Our grant expenses, and then our personal expenses. And again, we've lumped this all together. And so our difference between our income and our expense so this is what we've made, is just a little less than $2,000. So $1,771.50.
Yeah, it doesn't seem like a whole lot.
No, it doesn't. So sometimes, it just feels like sometimes we're just working for free.
In some years you probably are.
Yes, yeah. As long as we're keeping our head above water.
Yep.
That's a good thing. And with a budget or with a spending plan and with that cash flow, it gives you a whole lot better idea of what's going to be coming down the pike and everything. And, where do I need to trim expenses and things, One of the things when I put together my cash flow every year for our farming operation is I do a profit and loss for the previous year for each month. Okay. And I take those expenses and I put them into the cash flow, and then it's like, okay, wait a minute, why did we spend this amount of money on repairs in September? Oh, don't forget, we had to rebuild the tractor engine last year. Okay. So we probably won't have to do that this year.
Right, but it could be something else.
But it could be something else.
Yeah.
Yeah. Okay. So when you do a partial budget, you want to figure out what's the proposed change that you're going to deal with, and why are we needing to do this. List any additional costs that might be included with this. So labor, time, machinery, equipment, things like that. Any reduced income. So is it going to eliminate a product that we were previously producing? Is it going to take time away? Are we going to have to hire additional income when we think of additional costs too? And after we do whatever we're doing this partial budget for, is it going to be a new enterprise? Is there going to be additional income here to help offset for these costs? And then is there going to be any reduced costs? Is it going to reduce our labor? Is it going to reduce inputs? We're going to have to lease less equipment,
right?
Things like that. Okay, and then we're going to calculate our change in our profit by going through all those steps again. And then you also need to kind of consider intangible aspects, okay, as far as, how's it going to affect your stress? How's it going to affect your health? How's it going to affect your family time? Things like that. And, quite honestly, I'll be real honest. One of the things that my husband and I are looking at right now is how are we going to do, how does this affect us age-wise? Because we're both approaching retirement, and we make different decisions now than we did 20 years ago.
Sure.
So think about those things. Don't just think, oh, well, this is the way we've always done it. You might be wanting to make some different decisions because as you're aging.
Sure. Yeah. That's a good point.
So, and this is just a table that goes over what we just talked about with the partial budget example. Okay, so it has additional costs there, additional income, and then related income, or reduced income and reduced costs, and then you can add those all up and come up with that.
Yeah.
Okay, here's an example of cash flow, and this is by the quarter instead of by the month, and a lot of it's going to depend on the size of your operation. You know, if you've got a relatively small operation, you can probably do it by the quarter. My guess is if you're dealing with a banker and you're farming, if you're production farming, he's probably going to want it, he or she's probably going to want it by the month.
Okay.
You know, because of your expenses and stuff are going to fluctuate, you know, depending on your operation. Maybe you've got a lot of your income coming in January and February. But then you may have a lot of expenses in April and May, especially because you're doing fuel and chemicals and fertilizers and things like that and everything. So, yeah, if you've got a smaller operation, you can probably do it by the quarter. But if you've got a bigger operation, you're probably going to want to do it by the month. But when we think of cash flow, we want to think what our beginning cash balance is, what kind of sales are we going to have from either crops, livestock, whatever else it is. And government payments are listed there. But one thing I'll caution you about is we don't want to count on the government payments because they're not a given right now.
Right. They can go away at any time.
Right. Yeah. Because I know at the end of last year they had said that was going to be the last year for the MFP payments.
Right.
And now there's talk that they're going to have them again this year.
Yeah. We've got some farmers in our area whose bankers actually let them use that in their cash flow when they were trying to get a loan for some equipment and things, and they might not be able to make those payments if they don't have those large government payments. So those are a good thing to not include in here and just take as a bonus.
Yes. It's nice to have those payments right now because it's helping us stay afloat.
Right.
And everything, but please, for budgeting purposes, don't count on them. You know, it just makes things a lot easier. And then when we talk about expenditures or expenses, we need to think about everything. You know, seed, fertilizer, if you've got livestock, the cost of feed, things like that. Any marketing expenses you've got. If somebody's helping you with your marketing, make sure that you're including that cost in there because that's not a free service. Okay, and hopefully you're paying less for it than what you're making from using them. Yeah. Okay, and I talked about tractor payments and things like that. So that would be capital purchases. So whatever your annual payment is, or your monthly payment, or whatever it is, however you've got it set up for things like that, and also land would be included with your capital purchases. And then what's your interest payments going to be? Okay, interest payments on your land, interest payments on machinery, interest payments on your master note and stuff too, things like that. So you've got to account for the cost of that. So same way with your debt payments. Know what those are. Who are you paying them to? Is it an annual payment? Is it a monthly payment? Things like that. And also talk with your banker too, to know how they want this stuff set up. Okay, most bankers that I've ever worked with, they have no problem telling you exactly how they want it.
And they probably have very specific ways that they do want it.
Yes, they do.
Yeah.
We personally had a banker that we'd had for years. He retired several years ago, and we obviously got a new banker, same bank. Okay, forms stayed the same, but the expectations were a whole lot different.
Sure.
Okay.
And it's easier to make one trip when you know what they need versus multiple trips.
Yes, it is.
You don't really know.
Yeah. So, it makes it easy. Be in conversation with your banker and everything so that, they don't like surprises any more than we like surprises.
Right.
So, be truthful and be honest with them and, have everything delineated out so that they know what they're working with as well as you know what you're working with.
Yeah.
So, and there it is, just spelled out for you. It's over a year or progressive years. So there's year 1 through year 5 there, and final bank balance. So hopefully things go according to that, and our working capital goes up because we've gone from a year-end balance of $63,000 up to in year 5 as $116,000. And so that would be really, really nice, if our working capital went up like that every year. Unfortunately, in the way the ag economy is currently, that's not the case.
Yeah, we're probably a little bit tighter than that.
Yeah, just a little bit.
Yeah.
Okay, and then here's just an enterprise example. This one was specifically for livestock, and it has down, what kind of livestock it is. Is it by the head or is it by the hundredweight? Things like that. What did it cost? Did you have to buy it or did you raise it? The cost of the feed and all the inputs that go into that. And then vet and medicine, breeding, and don't forget your utilities and stuff too, because it does take utilities to run just about any kind of livestock enterprise. Okay, and then factor in those fixed costs. There's labor involved in that, and so if you can kind of figure out where you need to peel off some of your labor from maybe your row crop operation to your livestock operation, you can kind of see, okay, is this really making me money, or am I just letting the cattle graze the pasture because they're pretty?
Yeah. So we are the succession planning team after all, so we wouldn't be doing ourselves due justice without talking about budgeting for succession. So we're going to talk about budgeting for ownership and management transition. So I will say that you may think, oh, what's it going to cost to hand over my business? But there's a lot of costs. Not only time, but there's actual money costs associated too.
Yep.
So some things to think about: dual salaries. So it might take some time to train that new person to take over the business while still paying the leader who's going to exit, right? It'd be good to have a few years in between where both are working together and they're really learning. The new person is really learning about the business. The successor is learning where to go, what to do, things like that, while the leader is still there. And I'm assuming they're both still going to want to be paid if they're both still working.
Usually, yes.
You would think, yeah.
Yeah.
So another thing to consider would be higher salaries. So the successor, if you have a really great successor, he or she might be coming from a corporate environment or some kind of outside environment. They might want a little bit more income than even the exiting generation has been taking. So you need to think about that. And even though the salary is higher, it might be worth it to pay that person. If they're good and if they're going to be a good steward of your business and carry it on and do great things, and you see that continuing, it's probably worth it to pay that person a little bit more.
Yeah, and you need to think about too, when we're thinking about the successor, not only are they coming in to take over your business, but what skills are they bringing to the business? If they're bringing a college education in marketing,
that could be very valuable.
Yeah.
And what are they giving up?
Yeah.
So even though the salary might be higher than the current leader has, it might not be close to what they're making in corporate America.
Right.
You never know. So it's a good thing to, kind of have those conversations and really see what their expectations are. And I mean, in a lot of cases, it's probably worth it to pay that higher salary if you can. Another thing we want to think about are coaching costs. So we can have a quality business coach to help guide the new leader and the successor through the transition that can kind of help mediate both sides and make sure they're on the same page and lead them through a transition that, is a win-win situation at the end.
Yeah, because not only are you trading roles, because as the person that's leaving the business, you're the one that's been in charge. And now you're turning it over to someone. What if they make decisions different than you made them?
Right. Coming to grips with those types of things.
Yes.
Being okay with it.
Yeah.
So management and ownership transition are both hard. I would say that probably management is a lot harder than ownership
because
transition.
There's a lot of emotional ties there.
Yeah, if your butt isn't in the tractor anymore.
Yeah, what am I supposed to do? Yeah, I'm not real sure that I'm real good at being the one that runs for parts.
Right. Yeah, and that can be an issue. So having a coach to kind of help both sides through that can be really money well spent. Some other things that we can think about. So when you do go through that transition, you may have to pay out some stay bonuses and benefits. And what we mean by that is, transitions are hard not only on the incumbent and the successor, but they're also hard on key employees who might be working for the business.
Yeah.
There could be different leadership styles, different management styles, different expectations. Sometimes you're going to have to pay those people to stay. And that's just the bottom line. And a lot of times, if those key employees have been with you for a while, they know how the business is run. They can really be a great asset to the new successor. So it might be worth it just to pay them a stay bonus. Say, hey, I know this has been a rough transition. Your salary, and I know you haven't been paid extra for all the extra stress and headache you've been taking over. Here, I'm going to give you a check. I hope that this entices you to stay. Something like that. And if those stay benefits don't work we can talk about replacement costs, because replacing employees is expensive.
Yes, it
is.
It
takes a long time to search and find the right person, and you might go through a couple people before you find that person that's going to stick with the new leader. So think about those replacement costs. Lastly, we want to think about professional partners and advisors. So these people are going to really help guide you through the process and make sure all the boxes are checked, so you don't have to pay crazy taxes, so you're not violating any kind of laws or anything like that. So we would need to talk to an attorney, some tax accountants, business banker, financial planner, and there could be others. A lot of times we say, if your family is going through the succession process and you need a family counselor, it's okay. Go to a family counselor. We hear that a lot. People are ashamed to go to a family counselor, but if that's what you need, you want a healthy family and a healthy business going forward.
Yes. And a lot of times that's where we have some of those issues, is because we can't delineate the farmer, the business from the family. And so, a counselor could very well help do that. And when we talk about these partners and stuff, we also want to get them all together at least a time or two, so that everybody's on the same page.
Sitting all at the table, because you don't want to go to your attorney and they tell you to do one thing, then you take it to your tax accountant and they say, no, that would mix up your taxes, and then you're going back and forth. It's better. We've heard people say, oh my gosh, how could you possibly get all those big wigs at the table together? You can. You're paying them. You can set an appointment. They can have all together. Have your things in line before. Don't be hashing out little menial things at this appointment, because it's probably going to cost you a lot of money. But it's really important to get all those people together so they can brainstorm the best thing for your business, for your farm and your family.
It really is, because if you don't have all these people sitting at the same table and you're trying to remember what the tax accountant or the tax accountant told you to do, and then you go to the attorney and they don't set it up the same way that the tax accountant told you, because you lost something in transition, because you're not an accountant
or an attorney.
You're probably going to be money ahead by getting them all to sit down to the table at the same time.
And another thing to think about is, meeting with that tax accountant maybe before the year ends.
Make sure. Why? Because you need to adjust your income and your expenses so that you know what kind of taxes you're going to pay. We mentioned earlier in the program about if you're pulling money from your business and using it personally and stuff, that's considered income. Well, for your business, you need to be having some year-end planning and make sure that, you've got your income and your expenses balanced out so that you're not paying a big tax bill, every year, every other year, whatever the case may be. Because if you do some tax planning in December, then you've got time to either pull more income in or pay more expenses, either prepay or whatever else you can do to
get
plan
that
ahead.
Income down.
Get that income down.
So the bottom line is you need to choose a great team when you're doing this. So choose the correct successor and the right team to help facilitate a smooth transition, and that will be invaluable. The correct advisors can provide the resources and the guidance through the succession process that you really need. We can't emphasize enough how much you need to rely on these advisors. They're trained to do this job. They're there to help your family, to your business, your farm, and they can really help with everything from the money side to the communication side and the family legacy side in the end.
Yes. And when we talk about successor, we want to make sure that we're intentional about selecting our successor. I was just at the Women in Ag conference a couple of weeks ago, and Jolene Brown was there. And that was one of the things that she spoke about, was making sure you were intentional about who your successor was going to be for your business. Don't just assume that just because they're the oldest or they're the only boy or however it works out, that they're the appropriate one. Be intentional about who's going to make the best business decisions for this business, because she was talking about legacy businesses, and one of the things that legacy businesses have in common is they were very intentional about choosing their successor.
You want somebody who's going to be a good steward of that business and really guide the business forward.
Yeah.
And that, like you said, it might not be the firstborn.
Right.
You need to look at them like they're applying for a job. Do they have the experience that they need? Do they have the education? Do they have all these qualities that you would want in a good leader?
Yeah.
And some families have a really hard time with that. If it's not the firstborn, it's not the obvious choice. It's kind of going against the grain. But it is invaluable if the family business really looks at those things.
Yes, it is.
So we hope that you enjoyed this webinar. We're going to keep it open for a little bit longer. If you have a question, send an email to reneewyatt@purdue.edu, and we'll try to answer those questions as they come in. We really appreciate you taking time out of your evening to learn more about budgets with us. We want to leave you with a little send-off. Make sure that you keep in mind what wants and needs are, and make sure you're really evaluating those when you come to your budget.
Yeah, and also ensure that you keep your personal budget and your business budget separate. It will make it so much easier to keep your records, and also make it much easier when it's tax time and when you need to work with your banker.
And if you're doing all of these things, it will ultimately lead, hopefully, to a successful succession process that you can budget for and fund.